What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market. We will also cover the SoFi stock. And guys, the roller coaster continues. Non-stop moves in the market that just don't make sense. We got some good news to cover, some bad news to cover, and some more bad news to cover with the after hours movement that's happening right now. So if you enjoyed this video, be sure to subscribe to the channel. We will be keeping you updated daily. Be sure to smash the like button. Don't forget to drop a comment. Let's get into the video. All right, guys, we can see the market was overall green today. S&P 500 almost 2%, Dow almost 2%, NASDAQ 1.5%, Russell 1%, crude oil even green. And you can see here, SoFi Technologies down 3% on the day, down 1.5% after hours. We talked about Friday what I was looking to happen inside of the market, and that was to see a bigger washout, from the large mega caps, like an Apple, and the exact opposite happened. This is what we don't want happening, guys. This is bad news. We're getting a market bounce, a market rally because, there's inflows coming back into Apple, and we don't want that because, that's going to lead to a longer, market downtrend and the capitulation not fully completing. So that is why you're seeing, all of these indexes so green because Apple was absolutely skyrocketing today. You can see here on the day, Apple was up 4%. This is literally top 3 NASDAQ, top 3 S&P 500. This is exactly what you don't want. And at the same time, technology was getting, kind of hammered today, getting no green at all, while the overall market is going green. So that's what we don't want. We don't want to see tech going red and indexes going green. Now, we actually have a little bit of good news because on top of Apple surging, we have stock surging thanks to big rally for JP Morgan Chase and other banks. And if we look into the details of JP Morgan, we could see JP Morgan on Monday reverse course on guidance it gave in January, saying the bank could achieve a key performance target this year after all. The lender said that a 17% return on tangible common equity remains our target and may be achievable in 2022, according to a presentation. That's a switch from earlier this year when CFO Jeremy Barnum warned that headwinds, including rising costs, would cause the banks to miss its targets for the next 1 to 2 years. JP Morgan is holding its first Investor Day since 2020 in response to questions from investors and analysts about the bank's strategy investments. On Monday, the bank said that while guidance around 2022 expenses was unchanged at about $77 billion, rising interest rates, expectations as the Federal Reserve combats inflation may be providing a boost. The bank said net interest income in 2022 could exceed $56 billion, well above the $50 billion estimate given in January. So guys, that is great news. We know that SoFi is a bank as well. We were selling off while banks were rallying today. We are still not classified as a bank in the market's eyes. It sucks, but we should be seeing, some nicer returns, less losses because we have control, over our lending. We're going to not be borrowing from these third parties any longer, just like these other big legacy banks. And we should see us getting closer to profitability much faster. And this is a great sign for banks because we are a bank officially after we got that bank license. So we covered the bad news. The index is rallying with Apple, getting more inflows. We didn't want that. The good news, banks coming back, JP Morgan potentially having better profits this year. Now on to bad news again. Snap plunges more than 25% after CEO warns company will miss revenue and earnings estimates, slow hiring. This is the exact same thing we're seeing, with a company like Robinhood, lowering hiring, Amazon less hiring. But on the other hand, you're having banks saying this is good for the year. So every company, remember, is not built the same, okay? We are going down after hours because of Snap. We are not an advertising company, but let's just take a look at what Snap said. Snap will miss its own targets for revenue and adjusted earnings in the current quarter. CEO Evan Spiegel warned on Monday in a note to employees. The social media company will also slow hiring through the end of the year as it looks to manage expenses. We believe it is now likely that we will report revenue and adjusted EBITDA below the low end of the guidance range we provided for this quarter, Spiegel wrote in Monday's update. Snap's industry peers tumbled on the news. Shares of Facebook parent Meta dropped 7% in after hours trading. Twitter fell. Pinterest slid 12%. So they're bringing every advertising down with it. We will look at the after hours movements. We can see right here, Snap is down 30% now after hours. Pinterest down 12.5%. The Trade Desk, 8.5%. Meta, 7.5%. Bill.com, 5%. And Roku, 5%. And even some of the, fintechs like Upstart are down after hours. So guys, Snap is killing technology right now while we just had a bank rally. So guys, there might be some inflows coming back into banks, but guys, we'll just take a look at SoFi real quick and just see what we're doing after hours. We're not doing too bad. It looks like we're down about 1.3% after hours, so we are not getting looped into that advertising category. Thank goodness. But guys, we are not being treated as a bank right now. If we just look at the top three, stocks rallying today, Wells Fargo 5, JP Morgan 6. So you can see the banks are rallying hard while SoFi literally was one of the worst performers today at the bottom 92 out of 103 growth stocks, down 3% for absolutely no reason at all. I put on my Twitter, guys, I told Anthony Noto they should issue a statement. We do not want to get brought down, with Snapchat not being an advertising company. So maybe SoFi will issue a statement like JP Morgan did. I got to take a look when their investor, presentation day is. Now, more good news for SoFi. You can go over to NerdWallet, take a look at the top 10 best checking accounts of May 2022. Boom. Number one, 5 out of 5 rating. SoFi, 1.25% APY, $300 bonus with $0 minimum balance, guys. This is absolutely incredible. SoFi is listed as the best checking account right now for May, and that's why you're seeing 400 to 500,000 members continue to switch over to the platform every single quarter. So I think we are setting up to have a nice end of the year, guys, with our bank charter finally kicking in. And, a lot of this selling has nothing to do with what the company's doing. You also have here, guys, Galileo Financial Technology listed this on Twitter. Galileo earned record high quarterly revenue during the first 3 months of 2022. So more records, while companies like Snapchat, Robinhood are backing off guidance, going backwards, driving 32% year-over-year growth for SoFi Technologies platform. Galileo segment accounts also increased by 58%. So you can see this is a large portion, of the entire SoFi business, guys. I mean, they put out about 60 to 70 million dollars. This is going to be $100 million per quarter revenue business very soon. I think that's going to happen in the next 1 to 2 quarters, guys. So as you can see, SoFi is thriving right now, expanding into new international markets, and other companies that are just different type of companies are not doing well in this environment. Let's see how we react later on to the end of the week. Maybe SoFi will get more credit for being a bank, having control over their lending, having control over their borrowing and stuff like that. We should be getting into profits very soon by Q3, Q4, my personal opinion. All right, guys, as you can see, a pretty roller coaster day inside of the market. I did not like those indexes rallying today because of Apple up 4%. I was very disappointed. I wanted to see a further flush on Apple. So I think there's going to be more selling coming back when some bad news hits the market, and Apple is going to bring those indexes down even further. It really sucks that, Snapchat just, flopped on their guidance or earnings or whatever, because they're really going to bring down dozens and dozens of tech stocks that are in the advertising business. But we have to realize we are officially a bank. We are the fastest growing bank in the world right now, adding 500,000 members per quarter. We're going to see members accelerate when the NFL season comes around, guys. I really want to see SoFi, bring in a profitable quarter in the next 2-3 quarters, guys, with that bank charter license. So we are not being, listed as a bank right now, which sucks because banks are rallying. That's just, the short sellers continuing to bring us down. I believe there is a little bit of covering going on right now, but I think SoFi is going to continue to have the strongest earnings out of all of these tech stocks. So it really sucks to be selling off right now, but understand the earnings are, better than, these other companies are putting out for guidance. Once again, my name is Kyle. Hope you have a great day.